Rates on the rise once again today as oil escalates, and it's all due to the conflict that seems to be never ending. Feel like a broken record bringing that message, but unfortunately right now with no data until really Wednesday of this week and very little reaction from Friday's jobs report, and I'll discuss why in a moment, we have rates that are elevated once again today. So oil's on the rise, the escalation continues, the false promises, the rhetoric going back and forth. Now it seems like Iran, from a political standpoint, has the upper hand. Bottom line, there's no resolution. From an economic standpoint, that's not good. Inflation remains elevated. The longer it goes on, the further it gets embedded, which means that the Fed probably will do a rate increase, which the market is expecting. On the data side, let's break down the Friday's jobs report. It was a huge miss. There's no doubt about it. But if you break down by sector where the jobs were lost, number one, it was government. Thank God. Our government is bloated. We need to bring that back in. So that was a good thing. Number two, it was entertainment and leisure. And that was obviously a direct effect of the World Cup. We knew that was coming. One off, boom, out the window. Everything else looked great. Construction looked great. Healthcare looked great. So there wasn't really anything significant in that number. The one thing I will say, however, wage growth is continuing to decrease month after month. That is going to be something that the Fed needs to address. And let me stop right there. My name is Kevin Weedmark, aka The Mortgage Mouth. Each and every day I bring to you with what happened in the marketplace, how it affected interest rates, what do we got for the rest of the week, and should we float or lock? So this week we have CPI. CPI is a big inflation number. Fed has already said number one concern is inflation. So we need consecutive months of that coming down. We've had one. Well, we need this month. We need next month and probably the following month for the Fed to change their tune, maybe indicate that they're moving a little bit more to a dovish side. Until we see that, we're going to see elevated interest rates. And on the floater lock side, I'd be floating. Rates are elevated today. I'd be crossing my fingers for that inflation data and the potential of some type of MOU to follow up all the promises that we've heard from the White House and possibly get lower interest rates. And of course, if you need the lock, make sure you're utilizing yield spread premium to offset those closing costs, saving you thousands of dollars and setting you in the right financial position to refinance and secure those lower rates when the time is right. And if your lender won't talk to you about it, you need this guy right here, so give me a call. I lend in all 50 states, been doing it over 20 years, love an opportunity in your business. Coming to you tomorrow. Cheers.